Two gentlemen joining us, political commentator and election analyst Amitabh Tiwari and Rahul Arora, CEO at Nirmal Equities, join us now to tell us what this means, both from the markets as well as the political standpoint. Gentlemen, morning to both of you. Thank you for taking the time out. Amitabh, I want to start with you. Does this mean that 2024 is a sure win for the BJP? At least, has the probability of that gone up? And what was your biggest takeaway from the announcement that came through yesterday, the win that came through yesterday?
So essentially, we all say it's a health warning that state election results do not mirror normally the national election results. But since these elections are held very close to the national elections, it's bound to give a psychological edge to the BJP, especially in the Hindi heartland. So these three states are very important because these three states are states where the BJP and the number two competitor Congress are locked in a direct one-to-one contest. And there are 200 seats of this nature in entire India. And it does give a peek into what could happen on these 200 seats if the elections were held today or in 3 to 4 months down the line. It also gives a sense of continuity to the market. See, these three states, if you see the market performance on the dates of previous election years, which is 2008, 13 and 18, there has been 1.5 to 2% movement in the markets on these result days. And this correlation of state election results to national election results did not materialize in 2018-19 block. However, the market would see it as a continuity of policies. These three states are not industrial states per se. They have more agriculture as percentage of their GDP, except for perhaps Telangana. But this gives an edge to the BJP and also clears some uncertainties regarding the fiscal policies and the guarantees which could have a bearing on the central budget if the opposition comes into power.
Hi, good morning, Mr. Tiwari, and good to have you on the show. Quick question with regard to maybe some saw it as a semi-final, maybe some didn't. And as you said, in 2018, it didn't play out in that way in 2019 when we saw the Lok Sabha. But we had Mr. Piyush Goyal at an event, on Saturday itself, and he sounded very, very confident. He said 330 is there for the taking. What do you think? BJP can do even better in 2024 in comparison to what they did in 2019?
See, I think the confidence comes from the fact that the Congress has not been able to defeat BJP. And these are direct contests. While the BJP may struggle in some states where the regional satraps are strong, it is these 200 seats where the Congress also is not going to get any help from the regional parties as they do not have a significant vote share here. And these are the states, or these are the seats which give confidence to the BJP that they could even cross the 300 mark. See, Modi is a man of records. I'm telling you now, the mission is 400 plus for the BJP in 2024. And he would try to even break the record of Rajiv Gandhi of 414 seats in 1984, which the Congress got in the aftermath of Indira Gandhi's assassination.
400 plus. No, I think that's well put. I mean, man of records, absolutely he is. Who would have thought, right? MP especially, after 18 years, a verdict like this, it's quite something. Rahul Arora is also with us. So it's the economy, it's markets, it's political economy, really. Rahul, your thoughts, I mean, as someone who watches markets very closely, what does this mean?
So, morning, Prashant, and thank you so much for having me on the show. I think, in some ways, I think if you look at the last 7 cricket World Cups, Australia has won 5 of them. That's a 70% hit rate. And the BJP has actually won almost at a 60% hit rate over the last 5 elections from 1998. I think that tally is going to probably go up to about 70% after the next elections. I think, I don't know about the number of seats, but this has come as a real shock. So I think BJP will now emerge as the Australian team. It's so as to give you a cricket parlance, so to speak. If you look at UP, Bihar, which is the crux of the Hindi heartland, Maharashtra, Gujarat, and these 3 states that went to elections, and you add a Jharkhand, that pretty much takes you to the halfway mark. So I think in 5 months, unless something goes totally out of whack, I think this party is definitely coming back with an absolute majority. From a market standpoint, as I'm sure other guests have also told you, it ensures a lot of continuity. And I'll tell you what the biggest plus is and why I'm very optimistic now for the next 5 years. The first 10 years of the current Prime Minister have been all about policy reform. GST, DMON, RERA, NCLT, IBC, bankruptcy code, all of that, right? I think a large part of his second tenure has been spent with putting India on the global map, right? Along with not just hosting the G20, but the kind of alliances that he's run up, particularly in the Middle East and sourcing of crude and all of that. I think the next 5 years, and it's not a question of when he comes to, if he comes to power, it's a question of when he does, could be a situation, Prashant, where if your 5-year CAGR GDP, so the last 10 years under the Prime Minister, obviously it factors COVID, but the last 10 years average GDP has been about 5.7. If you're able to take that up to about a 7.5% CAGR, right, you're looking at this $3.6 trillion GDP this year, probably going to about $10 trillion in 10 years. This changes the dynamic completely as far as the stock markets are concerned. So it's a huge verdict. I think whatever comes today off the market comes, it will probably settle into whatever it settles. But this increases the probability of the Nifty accelerating faster towards 25,000 than, say, probably where we left the market on Thursday. I think some people probably had an inclination that this would come through. Yeah. Right. Obviously, you had a 7.6% GDP number to contend with, so the markets did well. But this changes the trajectory in a very, very material way from an economic standpoint. And like I said, if you get into a situation of 7% also compounded for 5 years, you're talking about a very different trajectory for the markets.
Well, Rahul, the last time we spoke, you were telling us that earnings are looking better. The yields are cooling off as well. And now you have this thumping victory. So whereas all the ingredients of seeing the Indian market really move up from here. But give us a couple of sectors that you'll be focusing on from here on. Now, namely, if you have continuity, you look at capital spend, infrastructure should do well, railways could do well, defense as well. But some of them have already done well. What would your be, in terms of a pick of the pack?
So, interestingly, Nigel, while obviously the government will continue to do what it does, I think the big global risk probably still remains a US recession. So I think while it's always good to talk about euphoria, I think it's always good to balance it out with risks, right? I think that is the call that everyone in the market got wrong for this current calendar year. So if that goes into a slowdown, the external environment may not be as conducive as it was from the export and import standpoint. I think government will continue to spend. The interesting part, and we just put out a piece on this recently, is that the capex announcements have gone down substantially in the first half. This can traditionally happen in a pre-election year because corporates probably want a little more certainty. And I think now you will probably see them go up in a very material way. But if you actually see the first half of this year, capex announcements are actually down by about 35%. Private sector is down 26%, central is down 35%, and states are down as much as 80%. All the projects that have been announced will obviously complete themselves, but I think now with some certainty they will revive. I think the one thing that could come back in a fairly material way is consumption. Yeah. Right, I think if this means more jobs in the hand of people, especially the working class and at the bottom of the pyramid, you alluded to the event that Piyush Goyal was at over the weekend, at the IBLA Awards. There were talks about per capita GDP going to $15,000 and $20,000, right? Yeah. If that happens, that changes the consumption dynamic quite dramatically. So I think that's probably one space to watch out for. Yeah. And while everyone will focus on the headline, you could probably go one down and say, well, if all of these things are going to happen, you're going to need cement. Yeah. So I think cement could potentially be another sector that could potentially do well. So I think these two potentially linked to the election outcome. Maybe a third one, which is probably not linked to either the US recession or this outcome, but I don't think too many people are talking about it, and could be a contra sector for next year, could be chemicals. I think this is probably not a bad time to be starting to nibble into chemical stocks.
You want to give us a couple of names? In the past, you've mentioned if you want to play the real estate theme, one indirect way could be cement, and I think JK Lakshmi Cement was one. You like Polycab as well. So give us a few, top 3 picks from your end.
So I think, Nigel, if you're playing it through cement, I think we like Ambuja and Ultratech in the large cap space. We do like Ramco in the mid caps and Birla Corp in the small cap space. I think there is reasonable room for earnings expansion in these, and those are certain names that we are fairly confident on. Polycab obviously has had a dream run, so I think we've actually downgraded to an accumulate, but I think structurally we remain positive. But I think when you come to chemicals, because you've seen a price and time-wise correction, and we're of the view that destocking will probably continue for the next couple of quarters, but that's probably the time to buy into it, is our sense. I think, you buy good businesses when they're going through tough times. So you could look at an SRF, maybe a few percentage points lower, maybe 22, 2300. So fluorination has a good space. So Naveen, and maybe if you probably go down the market cap chain, I think Fine Organics and Neogen also look interesting to us. So I think these are few in these sectors, and if consumption revives and you get an uptick in volume growth, you should definitely have one of Britannia, Tata Consumer or Nestle in your portfolio. It's a no-brainer. One of them. You don't need to have all three. And if consumption revives, then you could go back to the erstwhile names like Lever, which you're going to getting a 5% plus kind of volume growth. That could be one dark horse to play.
There's 3 minutes to go for the market open and the pre-open session. The sensex is up 950 points. And you've got the Nifty, which is up 20,600 plus, by the way, on the Nifty right now. Maybe just take a look at the PSU Bank. Just run through a few names, right? I mean, the PSU banks, for example, maybe the PSU Bank index itself, take a look at it. The Adani Group stocks is going to be another pack. The PSU Bank index is up 2.6%. But today it'll be a day when you'll have lots of indices that up, 1, 2, 3%. Enterprises is up 8%. Ports and, the other names. Adani, Total, etc. should come up as well. So this is a big move up across the board for that bunch. And maybe just look at the top Nifty gainers in the pre-open, just to give you a sense of the scale of move on some of these large caps which are coming through. The Nifty is deferred a little bit. The Bank Nifty has been the weaker, but and I'm sticking to large caps because mid caps and small caps, they've been on cruise control in any case. I mean, they never stopped making new highs. Even on Friday, I think was the 15th straight session of a new high for the mid-cap index. I mean, of course, the small-cap index has been even stronger, but they've got another 1.5% kind of gains coming through here. So it's if you remember that the day when you had that corporate tax cut, I mean, the closest I can remember is that. I mean, you basically opened, so many stocks opened 10% higher because you had that direct benefit translating to that 10% sort of advantage as far as the tax incidence is concerned. Rahul, any other sort of names or things you'd like to bet on even after this kind of a start?
You mentioned PSUs, Prashant. I think that could be a very, very interesting trade. I think if you look at, let's take the largest lender in the country, SBI, right? It's still operating at an 18% ROE, coming to you at what, 1.1, 1.2 times. I mean, what could be better than that? I mean, if this goes up, if you take the multiple even to 1.5, you get almost a 30-35% upside on that market capitalization, which could actually end up being huge. And this could probably extend to some of the other PSU banks like...
Yeah, no, absolutely, Rahul. Sorry.
Yeah, that's fine. I understand. Yeah, please go ahead.
Rahul, great to have you with us here. Thank you very much for your time and thank you for joining us on an important day like today.
Thanks indeed.